Hey guys, welcome to another video. So as you can see from the screen, the overall market seems to be pulling back a bit. We're consolidating after our large push-up. So I wanted to take this opportunity to talk about something that caught my eye on Instagram. And it's related to the whole Elon Musk thing. But if we look a little bit deeper, we'll find that things aren't always the way that they seem. So this is the original post that caught my mind. Right? It says how Elon Musk built the Twitter stake, shares he owned on this date, and the price at the time, right? So if you look, he has been accumulating shares since January, and he's been building up and building up and building up. All we heard about was this, in the last couple days, this huge 9%, 9.2% stake for $3 billion or whatever the case is, but he didn't build that overnight. So I think that's very important to distinguish when you're talking about following the trades of insiders, right? And basically FOMOing into new information that we get. So if we look at that, right, now, like I said, if you look at the headlines, it's a flurry of information, right? A 9% stake in Twitter, $3 billion, 9.2 stake. This all just came out, but it's not new information. So if you look here, just a quick Google search that I did Elon Musk buy Twitter in January? Based on that image that I showed you from Instagram, which has been passed along to everybody. It says Tesla CEO Elon Musk has been buying Twitter shares on almost a daily basis since the end of January. So he spent $2.6 billion, but that's over the course of months, right? He's been building this position, which means that he's been locking in a great average price per share, right? I mean, the whole world kind of fell apart in the beginning of this year. So he's been locking in a great rate by doing some dollar cost averaging, but he's just been doing it on the side. So this all came out when he filed his 13D, which is basically a disclosure of his investments, right? His stock investments. And that's where we kind of learned that this huge 9% stake in Twitter didn't happen at one time. He didn't get locked into whatever the price was at that day, $38 a share or whatever. He's been dollar cost averaging for a while. So let's take a second and we're going to look here. So let's look at Twitter and we'll see, how he's been doing. So if he started buying in January, we'll say around here, right? So 43, and he's been buying on a daily basis, right? So it got down as low in February as, we'll say 31. We'll say 30 for easy math, right? So if he bought it between 40 and 30, if he's putting an equal amount every day, which I'm not saying that he is because no one knows. I mean, you could check the filings, but I'm just giving an example here. So that means he has a cost basis of like $35, right? And one would think that as it goes down, he would buy heavier than if it were going up. But we're just going to say like $35 a share. And that's just, So if you were to follow that logic, right? If he is at $35 a share, then the price bumps to $54, $53. He's just made a tremendous amount of money in a short period of time. And the beauty of kind of the way the filing works is once he files, that's when the information comes out. So that's when the stock pumps, right? So if he's smart, he's building a big position before he discloses anything, builds it as it's falling, as it's low, and then I'm not saying that he's going to do this or that he did do this because there was a Twitter post where he said he didn't sell, but all he would have to do is, if you get your cost basis down to, 30, whatever, and then you wait till it pops to 53 and you sell, and I understand that there's liquidity problems, so you can't sell it all in one shot at the same strike price, and I get that. But the point is, he could wait for a pop that he created by disclosing his positions and then sell. So by the time you get information, usually it's old news. And another point to this is this article that I found, right, that basically said that there was a flurry of options activity in Twitter before he bought before he made his purchase public, right? So, in other words, and they say here, I find it interesting that the calls were bought in a big hurry late in the day ahead of the end of the quarter. If I was a regulator, I would be looking into these trades. So basically what they're saying is before Elon disclosed his Twitter holdings, there was a flurry of options activity, people buying calls, and obviously those calls printed money, right? Once the disclosures came out, the stock started pumping, people made their money. Now, unfortunately, people like regular people, Robinhood investors, and people that are not really paying attention in the market, but they have money in the market, they see the headlines and they say, "Oh, Elon bought 9% of Twitter, so Twitter's got to be going up." So then they buy. However, the problem is they're buying now at these elevated prices, and that was the video that I put out last time where I said, "Don't buy Twitter now because it's over." You missed the hype train. It's already pushed up too much. It's going to come back down. I mean, gaps traditionally get filled, right? But I'm sure there are some people that did. And what happens is those people, they missed the boat, and now they're buying at a high level. And then it's going to come down, and then people are going to start selling and taking their losses. And, day traders and swing traders are going to see the momentum is now gone, and it's going to fall, right? And then what's going to happen is it's going to fall to a certain level, and then the people that really are paying attention, or the people that know something that others don't, or they do research, or they've been in the market long enough, they'll realize that it's going to hit a point where then the Elon factor is going to start to take effect, and then the Twitter company itself is actually going to start to have better fundamentals. So it's going to come down to a certain level. I don't know what it's going to be, maybe 40. Just based on this where it was before it popped. And then at that point, it'll start to go up slowly in a more natural way, right? So the whole point of this is don't get too excited when you see a stock pumping, right? Just because it's going up doesn't mean it's going to continue to go up. Sometimes it's better to wait, let it consolidate, and then go up. So, guys, that's it. That's the whole video. Basically, I'm just trying to show you guys that don't go running around like a dog chasing its tail. Sometimes it makes more sense to wait. Give it days or a week or 2 weeks. Let it consolidate. Let the market shake out anyone that's short term. And then you can buy for the long term. So we'll keep an eye on Twitter. We'll see how far it falls. And I'll try to give you guys a good idea of where I think it might bounce in the coming days. But that's it, guys. Let me know what you think below. And I'll see you on the next one.